Bună dimineața! Hello everyone, and thank you for joining us in person and online today. It's a pleasure to welcome you to the launch of Financing the Corporate Climate Transition with Bonds, a practical guide by European Bank for Reconstruction and Development and Climate Bonds Initiative. My name is Gabriela Constantin, and I'm the Industrial Transition Program Manager within Climate Bonds Initiative. I am honored to be your host for the event that features the launch of the Transition Guide, along with the interactive sharing and reflections on market opportunities and challenges. Emissions cuts in energy and resource-intensive sectors are vital to mitigating climate change and ensuring competitiveness in a progressively world low carbon. The Transition Bond Guide was developed by the Climate Bonds Initiative and the European Bank for Reconstruction and Development and funded by the Green Climate Fund. Highlighting examples of best practices, the new guide helps companies take advantages of sustainable finance markets in advancing the appropriate climate transition journey. Let me first provide some insights into our agenda today. We are honored to have Victoria Zinkuk, Director and Head of EBRD, and Sean Kidney, CEO of Climate Bonds Initiative, to open the event. Sabine Laurent, Climate Bonds Senior Analyst, will present us with the Transition Finance Bond Guide. Sean Kidney will give us valuable insights on credible transition finance tools. Next, we will discuss products and market challenges with Dimitri Kufos, Head of Sustainable Business at the EBRD. We will also have a Q&A session, and we'll be taking your questions. For the online audience, please also post your question in the chat, and we will make sure to provide you with an answer. At 11 a.m. Romanian time, so that is 10 Central European time, we'll have a 15 minutes break and we'll continue with two exciting moderated panels: green bonds and sustainability-linked bonds in the corporate sector, moderated by Victoria, Director of Romania EBRD, with Magdalena Caramila, Director of Sustainability, Autonom Group, Iuliana Tiba, Director, Environmental, Social and Positive Impact, Financing Division, BRD Group, Societe Generale, Najima Ayubayeva, Business Officer at the AFC Green Finance Center, and Energy Solutions and Financing Frameworks for the Climate Transition, moderated by Sean Kidney, CEO of Climate Bonds Initiative, with Alexandru Chiriță, General Director, Electrica SA, Georg Hotar, Photon Energy Group, Drubavko Karacic, CEO, Zagreb Holding. Maximiliano Riva, acting as Sustainability Lead for Equity Funds and Corporate Bonds and Manager of the High Impact Program, will wrap up the event with conclusions and remarks. And between 12:30 and 1:30 p.m., we invite you to a networking session with refreshments. Thank you so much. Victoria and Sean, the scene is yours.
Ladies and gentlemen, very happy to welcome you all in Bucharest to our hybrid event. There are many people who are connecting to this event in Europe as well as Central Asia, North Africa. So from my side, it's a great pleasure for Romania to host this hybrid event. EBRD is very active investor in capital markets in Romania and in the regions where we operate. I will be focusing on Romania only for the selfish reasons because I do represent EBRD in Romania. I'm very impressed with the way Romanian capital markets capital markets is developing these days. And as some of you probably know, EBRD is a very active investor in the bonds issuances that many corporates as well as financial institutions have been conducting in the last few years. And it's very impressive that in the last few years, the market is really picking up and paying a lot of attention to the trends that other European countries as well as North America is already witnessing for many years. And we see that bonds issuances, including green and sustainability-linked bonds, not only by the financial institutions, but also by the corporate sector is picking up. Therefore, today's event, whereby we're presenting very practical step-by-step guide for those issuers who are still considering investing in green, sustainable, sustainability-linked bond, is very, very relevant. And we're looking forward to seeing many of you who are with us today in person as well as online, discussing potential issuances with EBRD going forward. We do have experience here in Romania while issuing while supporting issuances in the corporate sector. Real estate has been actually a sector which has been quite active, and I think that this is the sector which will benefit a lot going forward as well from these issuances. You will see a couple of our clients, both from Romania as well as from Croatia, the country where I was based before coming to Romania, that will be speaking today at our panel. And all in all, what I would like you to remember from my presentation today is that our doors are open for any of you who are looking to invest in green, sustainable or sustainability-linked bonds. And we do provide both advisory support in terms of the investment, and we actually walk the talk. So please do consider these products. Use all of the information that will be available to you online through the guide that we're launching today. But also do come to us early on, discuss with us, because we are very much interested to be an anchor investor in this type of issuances. We have got a framework that has been approved very recently, which allows us to go very fast in terms of our approval process. And I think all in all, you will see that EBRD will continue to be a very reliable partner for those of you who are interested to scale up and to apply these innovative financial tools. Thank you.
Thank you, Victoria. And thank you for the European Bank of Reconstruction and Development for the work they've been doing for some years on the climate transition. I don't know how many of you know, but the EBRD now has a mandate to be a climate bank. 50% of its lending is meant to be focused around climate, and the other 50% has to be at least in line with resilience. This is the same as the European Investment Bank. This is because Europe's policy priorities have shifted, because now shifting to a green economy, making sure we're in a position to take advantages of the changes coming through the world economy is a priority for the European Commission and for member states and the other shareholders of EBRD, such as the United States and the UK. They're absolutely committed to this topic. And of course, that's being reflected in the lending practices bank. And that'll be reflected in the changes to the economy we see in the next few years. I've just come from Japan, from Tokyo, where we've been helping the government with their forthcoming climate transition bond issuance. The bond that comes out in February will be $10 billion US in size in Japanese yen, but it's part of a $130 billion program of climate transition bond issuance, which is to fund their climate transformation or green transformation program. They're pushing Japanese industry with incentives to shift, to take advantage of the new economy and to abandon old ways of doing business that are no longer future fit. This change is happening around the world, the US, and in China, in India, and so on. There's extraordinary opportunity here, but there's extraordinary urgency too. A little bit more a little later, but the main thing I wanted to say was thank you for coming today. Thank you to EBRD and the Green Climate Fund, who has supported the development of this particular project. This is a project which looks to extend and expand a market that has already started and been successful. Since we started talking to the EBRD some 12 or 13 years ago, This market has grown from $2 billion outstanding to $4.3 trillion outstanding in green, social, and sustainable bond. We are absolutely looking for transition to be an extension of that market. It's not a separate, not a market, not a silo. It's something that will help investors that are looking for product, looking for places to put their money, to expand their understanding of where they can invest. So that will mean opportunities in clean energy, grids, smart energy, in water and waste. We'll hear about that later. In municipal investment, we've already seen from Cape Town to Paris to Malmo, municipal bonds that have been extraordinarily successful for those municipalities, and in the property sector, where we've seen green building bonds, which are essentially transition bonds, because they're about improving the property stock, being issued across Europe, notably in Poland and in Hungary, where there's been a whole crop of them thanks to the work of the Hungarian Central Bank. These are opportunities for Romania and Eastern Europe. Our job with this guide and the work we're doing with EBRD, supported by the Green Climate Fund, is to make it easier. To make it easier to take advantage of this market, to make it easier to know what to do, to make it easier to raise capital. We have to raise a lot of capital for the transition. We're looking for differential pricing capital, for capital benefits. At this stage, what we can offer, we in the broader sense of the term, is technical assistance. That's what EBRD is offering. There are credit support mechanisms to a certain degree available as well. There's lots of support floating around now. What we need is companies, municipalities, and governments who now have an interest in tapping this incredibly fast-growing and exciting market. That's what today's about. Thank you for being here. Over to my next speaker.
I would like to invite now Sabine Laurent, the author of the Transition Bond Guide. Please, Sabine. You have the micro there.
Thank you, Gabriela. Thank you, everyone, for coming today to the launch of the guide. So my name is Sabine Laurent. I work at Climate Bond Initiative. I would like to thank Mr. Riva for his guidance throughout the writing of the guide. So today we are going to discuss a subset of financial instruments that are part of what we call transition finance. So what is transition finance? Very simply, it's finance earmarked to fund the decarbonization of a company. And so we have bonds that can be issued as part of transition finance. And I'm going to straight away give you a few examples of these bonds. So the first one here is a sustainability-linked bond. We have one example in this country of an SLB that was raised recently by Autonomous Services. Autonomous Services is a leasing car company, and they had this target to decarbonize their fleet. The target was to reduce by 25% the carbon intensity of their fleet by 2025 from a baseline of 2020. To do so, they decided to raise a sustainability-linked bond. So this is a bond like any other vanilla bond, except that the coupon payment in this instance was linked to a performance indicator. The coupon will stay at 4.1% if the company reached the target they had decided upon before the issuance. So that's why we call them sustainability-linked bonds. But apart from that financial features, the bond is exactly like a vanilla bond. It has the same financial characteristic in terms of seniority, maturity, etc. So this type of bonds are used for general purpose financing. But we have another category of bond that this time is a use of proceeds bond. And the use of proceeds bond can have different labels depending on the nature of a project. So here we are going to mention two of them, the sustainability bond and the green bond. So let's look at one example of green bond. So this time we are going to look at the example of Air Liquide, the French manufacturer of industrial gases. They also have a target to decarbonize their production. Their long-term target is to be net zero by 2050. And so as part of their climate strategy, they raise green bonds regularly. So what is a green bond? A green bond is a bond for which the funds will be used for very specific dedicated projects that are assessed as green. So in the case of Air Liquide, they have a pool of CapEx that they need to decarbonize. For instance, they want to build green buildings, they want to build solutions for electricity storage, they want to extend their production of hydrogen. All these projects are considered green. And so they create their framework with this list of potential projects to fund, and they raise the bond in that way. So the main difference between a sustainability and a green bond is about the nature of a project. A green bond will have projects that are good for the environment. A sustainability bond will have projects that can be either social projects or green projects. So apart from that, again, the bond has the same financial characteristic as a vanilla one, same maturity, same seniority, and so on. So as Sean was mentioning, the market has been booming. We can see here that there has been an exponential growth until 2021. And in 2022, the market actually followed the general market trend of less issuance, but not less interest. So what can we see as benefits for the issuer? First of all, to raise a green bond or a sustainability-linked bond is, first of all, to announce to the world that the company is transitioning to sustainability practice. So it's a marketing tool. The second thing we observe is that the pricing of this bond sometimes can attract what we call a greenium. It is cheaper for the company to issue these bonds. We observe it for about 30% of the issuances. There is a clear higher book cover for these bonds. There is a lot of demands from the investing community for these bonds. And we observe also a higher spread compression compared to the vanilla equivalent. In general, what we hear from the investing community is that there are not enough issuances. The demand is strong. So I'm going to go into the step of creating these issuances. It's going to remain very simple. I invite you to look at the guide for the details. If I have one advice to give, is that when we raise a transition-linked bond, whatever it is, the key aspect is to anchor the bond into the corporate transition plan. So what do I mean by that? So we are going again to look at one example. So here we are going to look into the detail of the first step of a bond issuance, which is to build a transition plan. So this is the example of Enel, the electrical utility company, the Italian company. This is a graph summarizing part of their transition plan. So what do we see on this graph? Well, first of all, Enel had to measure their carbon emission. And so we see on the left, on the y-axis, the carbon intensity of their production. So the amount of CO2 they emit per kilowatt produced. And so we learned that it was about 400 in 2017. From that baseline, Enel decided to build a strategy to decarbonize and to set targets of decarbonization throughout from 2017 until 2040 here. So they looked at that portfolio, they looked at what were the levers they could use to decarbonize, and they decided on a certain number of targets and dates to decarbonize. So we see from that graph that the key information that is needed from a transition plan is, first of all, the targets. How much CO2 do I commit to emit after a certain date? And also the levers, the activities, the CapEx, the OpEx that will be needed to reach these targets. One last important thing when the company builds a transition plan is to ensure that the transition is just, meaning that it has to take into account all the stakeholders and make sure that the social aspect of the transition is factored in. So when the company creates the transition plan, as we were saying, it will first, like the graph shows here, it will first establish its emission. And once this is done, the transition plan is something that will be recurring through time and has mainly three parts. It has an ambition part, which will set the targets. It has an action part where the company describes which action it will take to decarbonize. And then it has an accountability part where it will explain to the investing community and the rest of the world how it is progressing in its transition. So from this information, we can extract the data that we need for the bond issuance. I wanted to highlight that transition plans don't have to be perfect. The first time a company issues a bond, the transition plan might not be yet very mature. What matters is to start the process, and the bond issuance can be raised even if the transition plan is not extremely detailed, extremely well thought of, because obviously this is something that is evolving through time and will improve with time. So once the transition plan is built, the question is obviously which bond to raise. So again, I'm going to use the example of one company. So this time, this is a Mexican group, Grupo Bimbo's. It's one of the major bread producer worldwide. So they initially decided to raise a green bond, and that's actually quite standard to observe as a first issuance, green bonds. Why? Because this is a market that is quite well established, and typically companies on their path to decarbonize will start by installing solar panel on the roof, to retrofit their building, and so on. So a lot of expenses that are actually eligible under a green bond issuance. So these green bond or sustainability bonds are use of proceed bond. So the main features of this bond is that they need a critical mass of eligible projects, so projects that are assessed as having a green impact or a social impact. And so then you can raise them. So so the question obviously is, how do we know if a project is green or social and so on? So the main tool that exists for that is the taxonomy. So the EU has developed a green taxonomy, and Climate Bond Initiative was actually the first one to have quite extensive taxonomy. So yes, I wanted also to highlight something, is the project that are eligible under these assets can either be climate solutions, so activities that will still exist when we are in a net zero economy. But there are also, this project can also be what we call transitional activities. Like Sean was mentioning earlier, when you, for instance, you retrofit a building nowadays, you retrofit to a certain standard. These standards will be more and more demanding with time. That's what we call a transitional activity. So second example, this time, still the same group, as they were being more mature in their transition plan, Grupo Bimbo also decided to raise a sustainability-linked bond. And so this time, the main criteria is to find targets and a key performance indicator for the bond. These bonds have more flexibility than the use of proceed bond because you can use the fund for anything. But indeed, here what matters is to find key performance indicators and ambitious targets that you will use to link the bond to your transition plan. So these key performance indicator, most of the time, they are actually linked to the decarbonization pathway that you set for the transition plan, but it's not necessarily this. You can also have key performance indicator that shows how the company is developing the climate solutions. So for instance, in the case of Enel earlier, they raised the sustainability linked bond, and their key performance indicator was the percentage of renewable capacity that they are obviously installing. So the step 3 of the bond issuance is to just explain in a document your plan, so the transition plan and which bond you decide to use. So it is a market practice to follow the guidelines of the International Capital Market Association, ICMA, on these instruments. And it is encouraged then also to follow a bond standards to enhance the credibility of a project. So the EU has come with the green bond standards recently, and climate bond also has a standard and certification scheme that can be used to raise the issuances. So the main difference between ICMA and the bond standards is the fact that the projects that are being financed are linked to a taxonomy or sector criteria. So the EU has the taxonomy. Climate bond has developed sector criteria that covers not only sectors that are already considered as green, but also sectors that need to transition, like steel, cement, electrical utility, and so on. So the next step is simply to work with the underwriter to proceed to the issuance of the bond. And typically the underwriter will provide a lot of guidance, and he will also facilitate the marketing of a bond. One final step, and this is maybe the most important one for the investor, is actually the post-issuance reporting. These bonds are raised to have an impact, and so the corporate is asked to prove that the financing is indeed having an impact. So there are a certain number of reports that have to be published every year to explain how the funds have been allocated, which impact it had, and also if this use of proceeds were aligned with the taxonomy, is it still the case as time passes? So thank you very much for your attention. I believe we will have a series of questions after the next talk. Thank you.
Thank you, Sabine. So this leads us to the next part. Sean Kidney, the CEO of Climate Bonds, will give us more insights on credible finance transition tools. And I want to remind you that we will have a Q&A session, and please think of your questions. And for the online audience, please put your questions into the chat. Thank you.
I'm just a warm up for the question. It's an answer session. So you've got a few minutes to prepare. And it can be on chat, but we will have microphones running around the room, right? So just to warm you up, you know the background I alluded to before, but we have severe challenges around climate, which is guiding European Union policy. The World Meteorological Organization now says that the G20's maximum 1.5 degree target, which was set last year in Indonesia, will be breached by 2027. We'll see warming. We still have a chance, and this now remains the science target, to get emissions back down far so we can get temperatures back down. So the best forward forecast we have, which is captured in the Inevitable Policy Response Project that we're involved with, using modelling by McKinsey's, says that we will get to 1.8 degrees around 2040, and we should be able to get temperatures back down again with large-scale sequestration, mainly forest and agricultural practice. But it is tough. So for policymakers, this is tough. It's tough because if we don't meet this, it's unimaginable. The alternative, or rather the current trajectory, is warming, which will see 2 degrees escalate into 3, 4, and 6 or 8 by the end of the year, Celsius warming. That's average, by the way, which means over land, because typically seas don't warm up as much, over land, it'll be an average of about 13 degrees Celsius around the planet. Much warmer in the Arctic and Antarctic, which means ice melt, which means sea level rise, which means dramatic changes to global hydrological system. It's not a future that we want to contemplate for our children. So that's what we're trying to address and deal with in the climate targets that we're discussing at a European Union level. And make no mistake, while the current 2030 targets for Europe seem tough, the discussion at the European Parliament and amongst member states is about increasing those targets, not reducing them. They will actually get tougher. Europe is actually going to meet its current targets. It's just that a 50% reduction by 2030, the current targets, is less than what the Intergovernmental Panel on Climate Change says we need to achieve on average globally, which is 55% by 2030, 60% by 2035. Clearly, richer countries have more chance than poorer countries, and that's reflected in differential modelling by the International Energy Agency and others. So these targets will get tougher. What does that mean for companies and municipalities? It means there will be more direction to change. There will be more guidance and more incentives coming through to change. We need to prepare. Bear in mind that getting to 1.5 or 1.8, scary as it is, which is still a risky approach, will involve significant changes to our climate anyway. That is now certain. There is no doubt whatsoever that we will see substantial changes to rainfall patterns around the world, to crop growing areas, to summer heat extremes. The heat we've seen in the Mediterranean this last summer is nothing compared to what's coming through. Now, 2 years ago, I can remember taking a phone call from our Vancouver-based manager of resilience who was telling me in the middle of the heat dome, Vancouver is not a warm place, right? This is where they get a lot of snow. Where they were suffering a heat dome, 50 degrees Celsius heat. It happened in 2 waves. We saw big fires. She was trying to find a hotel that had air conditioning that worked, that she could put her 2 young toddlers, kids into, because her house was not built for that kind of heat. People died in Vancouver from the heat in that period. These kinds of volatile weather extremes are going to become the norm very quickly anyway. So we have to prepare. It will mean things like reconfiguring our urban environments to be able to deal with heat and with drought and flood. Much tougher cycle going forward. Some places like Boston are already increasing the size of the stormwater drains because their rainfall patterns are changing from gentle rain to monsoonal storm. It'll mean very different experiences all around the world, which we need to prepare for here, unless we're to avoid major loss of life. And it's not just putting air conditioning on the side of all the buildings, because unfortunately, that's incredibly energy inefficient. We need to be thinking differently. Of course, the other side of this is that there is now a willingness on the part of major economies in the world to act. We now have strong emission reduction commitments in Europe, in the US, in Japan, in the United Kingdom, and would you believe in India and China? Action is underway. Amongst global investors, there is a sense that something is changing. The transition has started. Because the investment that we have to make in this transition is around $150 trillion US by 2050. It's a huge investment pile. There's an understanding that if we're going to start moving that kind of money, there will be business opportunities, as there certainly will be. So the key developments to date, guidance about what to do. This is, of course, what this guide is about. The European taxonomy is essentially a shopping list for what to do, a shopping list for the future. We've been involved intimately in the development of that in the last 7 years. We have also equivalent taxonomies in China, which was the first country to adopt it, thanks to one of the recommendations we made in 2014 to the People's Bank of China. But now 50 countries around the world have adopted the broadly European model of developing formal guidance about what to do in the context of climate action. The latest ones we're working on are Australia, Singapore, and Rwanda, which will be publishing its taxonomy at the COP in 3 weeks' time. We do have guidance around transition plans now becoming the norm. And with our friends at the Glasgow Finance Alliance for Net Zero, representing $130 trillion of investors globally, we are actively promoting transition plans everywhere, as you heard Sabina say. This is the year, this coming year, to get transition plans in order, to start the process. The second development is regulation and incentives, the twins. They're two sides of the coin. We've, of course, seen the Network for the Greening of the Financial System, the association of 150 central banks around the world, develop scenarios for what's going to happen, what's likely to happen on climate action, and developing responses accordingly. Updated scenarios were published a couple of weeks ago. We've seen some central banks take action. The European Central Bank has an explicit bias towards green bond purchasing, for example, and there are many other measures they're working on. The Hungarian Central Bank has introduced risk weighting differentials in the capital ratio requirements for banks if they issue green property bonds. And that has spurred a significant issuance of green property bonds amongst Hungarian banks. The People's Bank of China has a regulatory requirement that banks in their bond portfolios must have 5% green bonds. And that's what's driven the growth of the Chinese green bond market, which is now the world's largest national green bond market. Europe as a whole is larger. We have also, though, seen significant incentive policies. In the EU, Repower EU is full of incentives to grow clean energy and related investments. We've seen more recently in Europe the Sustainable Aviation Fuels Policy, which mandates that airports in Europe have to be able to offer 5% sustainable aviation fuels by 2030, mandates, and subsidizes the price difference. So no airline will pay more for sustainable aviation fuels in 2030. The price difference between them and kerosene will be covered by the European Commission. We will see this market grow very fast. There may be opportunities for Romanian producers in that. In the US, the Inflation Reduction Act has turbocharged the growth of electrification, of electric vehicles with subsidy programs, and of green hydrogen, that is hydrogen produced by renewable energy. And in Japan, the green transformation program that we've been working on them with is a 150 trillion yen program, equivalent per capita as a share of the economy to the US IRA, to promote green business, green industry, and green transformation. And then lastly, in Europe, under the CSRD, the guidance for corporates, all major corporates will be required to develop and publish a transition plan. This will affect many companies in Eastern Europe. And of course, this is what this guide is about. But lastly, and most importantly, in terms of key developments, has been the growing belief by global investors that the world is about to change. The belief that the future has been decided, that it will be green as a result of the commitments by all the major developed economies of the world. And in that context, the question now is not if, the question is what to invest in. How to take advantage of what is going to be, is already beginning to be, a tsunami of change in the global economy. Who are going to be the winners? Who are going to be the losers? How do I pick them? In the words of one Swedish investor that I spoke to, if someone issues a bond nowadays and it's not green, and they haven't done a green bond, they're asked, is there something wrong? Have you got a transition plan? You're going to see green bonds and transition bonds and finance and loans, any kind of finance used as that's in this area that's relevant, used as signaling that companies are changing, signaling to their investors, their fixed income investors, their banks, their development banks like EBRD, their governments, and their equity investors, that things are changing. The opportunities, energy, of course, renewable energy, batteries. These are two sectors that are dropping in cost, 20% per annum on average. Frankly, there is nowhere in the world, in our view, that if you take apart the current biases in regulatory systems, where solar is not actually cheaper. Does it solve all problems? No, because we've got the stabilization of energy system. That's where batteries or pumped hydro. Pumped hydro is responsible for 95% of electricity energy storage in the world. And there'll be a lot more pumped hydro coming through. But the price is dropping like a stone. Electric vehicles are dropping like a stone in price, thanks to initially subsidies and now the learning rate. In China last year, the world's largest auto market, 20% of all cars sold were electric. This year, it's 36%. In Germany last year, 50% of all fleet cars sold were electric. 50%. Because they're cheaper. Because the OPEX, the operating cost, is actually lower, much lower, and balances out still some increased capital costs, which are changing quite quickly. In water and waste, there are opportunities, and there's guidance out there for investments that are energy efficient or improve energy efficiency. You know, water consumes some 7% of global electricity supply. If we improve the energy efficiency, we make a big contribution. In some places, by the way, like California, it's 17% of electricity is used to pump water around. But resilience is also important too. We need water investments that are consistent with the changing hydrological patterns we now know are coming through. Land use, agriculture that manages carbon, industrials, steel, chemicals, cement, buildings. The largest slice of thematic bond issuance going forward will be in the property sector and in the bank sector. Banks have a lot of opportunity. We have published guidance for how buildings in major cities, all major cities in Romania, will meet the European taxonomy. There is opportunity, plenty of opportunity in Romania, in Hungary, in Croatia, in all Eastern European countries, where guidance is available to do green bonds for property. And we have already seen them, especially in Poland and in Hungary. And then finally, municipal. We've seen municipal thematic bonds, resilience bonds, green bonds, transition bonds issued in Cape Town, San Francisco, Malmo, Paris, Madrid, Stockholm, and I can go on and on around the world. Lots of opportunities here. To finish up next, we're going to see transition finance become a major player. We are predicting $1.5 trillion US of transition finance in the next 2 years. Japan, as I said, is already committed just for sovereigns for a $130 billion program that the Japanese corporate market is buying, but this is happening in China, in ASEAN, and will happen in Europe and the US as transition plans start becoming the norm. There will be improvements in guidance. For example, in the first quarter of next year, we're publishing guidance for the certification of energy utility transition plans. We already have them for shipping, steel, cement, chemicals, etc. There will be improvements in usability and interoperability of taxonomies. Watch this space. We have a mandate from the European Commission to work at the European Platform of Sustainable Finance to make it easier. But then finally, there will be incentives. There will be more fund mandates coming through, and there'll be more of the sort of support the European Bank of Reconstruction and Development is offering. Technical assistance, access to credit support, either from EBRD or other agencies that EBRD is speaking to, and, of course, introductions and access to investors. The opportunities are immense. Investors, biggest problem around the world in every single country I go to is not mobilizing capital. It's actually mobilizing supply. It's mobilizing places to invest that meet the green and transition requirements that investor clients, their pension funds and so on, are now demanding. That's why I'm here today. It's about getting more bonds and loans into the market. I mean, in a way, we're lucky, aren't we? We have the capital who wants to invest. We have a problem which we've got to shift our economies to being green, low carbon, and resilient. We just need to bring the two together. Questions?
Thank you, Sean. That's true. Climate transition finance has a vital role to play in corporate transition. We have one more presentation from Dimitri Kufos, and then we will start with the presentation. And
Dimitri, join me on stage. Can I just ask, are there any questions at this point? Is there anyone who's got a bond they want to bring out or a loan who hasn't done one first, that wants to ask a question? We can arrange a meeting afterwards. There must be someone. Yes. Okay. Let's get a microphone out there. Dimitri, come on up. We are all friends. Anyone else in the room? Please, tell us who you are.
I am Iuliana Tiba, representing BRD Group Societe Generale. You have mentioned the fact that there are investors ready to provide financing. There are funds available. There is still not enough demand eventually for, let's say, bridging this gap. Could you indicate to us what, in your opinion, based on other markets developments, would be a trigger or a driver for this demand for this type of instruments?
The biggest challenge is actually capital markets development. It's not green. So in every Eastern European market and regional market, capital markets are small, tiny. Getting the market going is the key part, which is, of course, is a separate base EBRD program, and of course something your bank has been involved in doing. But I want to stress, it's not just bonds, it's any sort of finance. So this is now leached across to other sectors. So loans, Société Générale in France, for example, has a green loans program, preferential. And the other French banks have internal risk weighting requirements. So Natixis and Credit Agricole and BNP Paribas are incentivized internally to make green loans over other sort of loans. Many other banks are following this around the world. There's a lot of other things. And then equity. We're now seeing the growth of significant demand specifically for equity that meets it. We're now being asked to certify, as consistent with the Paris Agreement, equity funds. So it's pretty well everything. Bonds is the headline in our name, but I want to stress it's all kind of, including, by the way, EBRD lending. Isn't that right, Dimitri? Please.
Yes, yes. So what Sean just mentioned is actually true. I mean, the development of the green bonds is basically the aftermath of development of capital markets. So you have an active capital markets and a very deep capital markets, and developing the green bonds is a natural occurrence of that, right? But the question is going forward, and within the EU, as part of your CSRD requirements, you will have to develop transition plans. That's by definition, right? So in that sense, you know, the capital markets will have to develop, because developing a transition plan is not a 2-3 year story. It's a story that goes for 5, 10, 15 years. As Sean said, it's a commitment, it's a dynamic process, and it's long-standing. So deepening the capital markets will be an eventual consequence of that, right? For us, helping these financing is something we would like to do. As Sean mentioned, we have our technical assistance program. We can support you in developing the corresponding sustainable financing framework, which would lead then to the various financing instruments that you could use, including green bonds or sustainability loans or sustainability linked instruments in general. Therefore, over the course, let's say, of the next 2-3 years, this preparatory 2-3 years, you will have to develop all these. And the credibility of your transition plan, right, even though it might not be as perfect, would be the basis for you to start going into that market. Okay.
I'll leave you to it.
All right. Thank you very much. Thank you, Sean, for the very inspiring introduction and intervention. So from my side, I'd just like to say thank you for having us today. A great audience, great turn up. Thrilled to be back to Romania after so many years. I remember last time I was here was back in 2016, 17, pre-pandemic, considering that we all lived through that. But just building on what Sean and Victoria said, we just have to remind ourselves that decarbonizing modern economies, to reach the goals of the Paris Agreement has never been done. And as such, it presents risks. It presents risk to everybody that's involved in the economic activities, to investors, to governments, to policymakers, to asset owners. And how we manage these risks and how we build the narrative of these risks is something that we try and understand, and we try to develop through the framework that has been put forward to you today, right? And as I said before, it's a long-standing commitment. It's a dynamic process, and it just underlines how your business will have to evolve over the years to come. So for the EBRD, considering we have a specific geographical focus, that transition manifests itself in terms of money with this graph. Here you can see basically that for us, and an exercise that we did in 2022 provides the gap in financing that needs to be done by 2030 for everything to be Paris aligned, right? And it's about 400 billion per year, right? That's that amount of investments, that amount of funds of considering our country operation is very challenging. And how to raise that funds and what type of instruments, what type of financing, the financing mechanisms, your targets in your overall decarbonization plan, it's what it is at the heart of this guide. For the EBRD, just to give you a bit of background, these are the numbers that we've worked on over the last years. Since 2006, the inception of our Sustainable Energy Efficiency Initiative, which has evolved since then to our Climate Strategy Delivery Team. As a reminder, as of January this year, we're a Paris-aligned institution, which means that every project that we put forward has to be Paris-aligned and has to meet the objectives of a clear transition plan. And we have various objectives, not only on CO2, but we have also on water, on waste, and on material that form the part of a larger sustainable ecosystem for delivery. Our climate commitments, as mentioned, a Paris Agreement commitment, double mobilization, and increase the share of green financing. We've met actually those commitments. We're a Paris Agreement institution. We've financed more than 50% of our annual business volume, and we're hoping to grow that even more to more than 50%, reaching to 60%. And we're doubling our investments in climate finance already. In terms of the business model that we employ, it's built on these circles. We have our EBRD finance, which is the cornerstone of our impact and made basic delivery mechanism. We have our technical assistance and the project support, where we engage with clients and potential clients in supporting them in the transformation journey. We have our concessional finance, which is the instruments that we have at our disposal to utilize to support those investments that are not economically attractive, whether there's grants, whether there's guarantees, whether there's climate finance, where there's technical support, and those are dependent on each individual case. And then we have our policy interventions, and our policy interventions are both at the government level, but also at the market level, such as this guidance note here that we're presenting today. So we have been active in the green market space for quite some time now, since our first green bond issuance back in 2010. And since we've been working on over 100 green bonds in more than 10 different currencies. We have developed partnerships with the European Commission. We're part of the Sustainable Platform Financing, a member of the EU taxonomies. I sit on one specific one for the minings and the metals. And we are investing in bonds issuance in various countries in local and international currencies. In terms of our overview of our sustainable debt financing here, some of the key results, as mentioned before, we have the instruments which are by results, outcome-based, either sustainability-linked loans, sustainability-linked bonds, and the use of proceeds, which are green bonds or green Schuldscheins or other emerging markets, other emerging instruments such as transition bonds. Some cases that we've worked on. It's one case particularly important, which was the Public Power Corporation in Greece, where we supported them in issuing their first sustainability-linked bond aligned with ICMA principles. That was very important because we supported them in developing their first TCFD-aligned reporting, which then was the basis for them to develop a transition plan with a clear phase-out of coal, lignite in the country. And that was back in 2016 at the aftermath of the financial crisis. And that was very important for the country at that point in time and for the company, because it gave them a clear signal to the market that they've actually committed to a clear phase out, right? And they've actually lived up to that promise. And we participated in that. Then we worked with Coca-Cola in Turkey in participating in their Eurobond issuance. And we supported them in putting forward this bond that was second party opinion, but it was focused mostly on sustainability performances such as water and efficiency and wastewater management. Now, in terms of what we've learned going forward, we live in a fast-paced era where technological advancements are happening at an unprecedented pace. You've heard before about electric batteries and how they're being much cheaper. But you have to keep in mind that at the background, we have the electric revolution is changing so fast that within a space of just a few years, we have so many electric types of batteries that are going to be changing completely the landscape. And how that is going to be financed is going to be quite interesting. We have science-based targets, which provide a methodological framework and greater accountability of how to plan your transition. And then we have the regulations that are shaping the long-term commitment but also providing the regulatory context and the incentives upon which markets can be stimulated, and the commitments can be made at various levels of corporation. Finally, we have gathered sufficient knowledge and experiences over the last years of how to benchmark, right? Benchmark is important because now we know how each company's or corporate's transition plan or decarbonization roadmap can fit within the broader agenda and whether it is credible or not. Now, so I'm not going to overemphasize again what you've heard before from Sean, and that the market is growing, right? As you've heard before, if you don't issue any type of green instrument in the future, you'll be questioned why you're not doing that. So we have to keep in mind that going forward, everything that you issue in the capital markets has to have elements of green. Either it's a green bond or sustainability linked bond or sustainability linked loan, the credibility of which in the coming years will be the key focus. And the credibility of that will rest on how much your sustainability agenda and strategy is reflective of that. In the practical guide, you've seen the key outlining steps, but those have to be endorsed, those have to be validated, those have to be reflective of your ambition and your strategy as you put forward your decarbonization agenda. All these things relate then afterwards to how much you can get your credit enhancement for, because there will be a price, and that price will be reflective of how ambitious and how clear you are. Now, some of the key instruments that we have at our disposal is first of all the GCI, what we call the high impact programs. The high impact programs are a name that we've put forward because they reflect that we're trying to have a big impact. These are donor-funded programs from the Green Climate Fund and the Clean Technology Fund. The Green Climate Fund has actually funded this work that we put forward with the Climate Bonds Initiative. And there are climate finance programs in which there are sustainability-linked targets related to interest rate reduction put forward once the company achieves those milestones. So one milestone could be putting forward a capital expenditure program that reduces your emissions or your emissions intensity by a certain amount, then put forward a more ambitious decarbonization agenda, or changing completely your business model in terms of your governance and integrating climate-related risks and climate-related models into your agenda, and then you're going to further rate reduction. All these mechanisms are targeting so that they can support the investment decisions at a company level in order to meet the decarbonization goals. And with these programs also, there's offering of a technical support scheme. The technical support scheme aims to support the company in developing long-term climate roadmaps, low carbon roadmaps, but also internally developing the corresponding internal organization. And we develop low carbon roadmaps. We engage with the company in basically developing their transition plan. Of course, the transition plan involves broader things, including your sustainable financing framework, corresponding to commitments. But the low carbon roadmap that we develop with you is basically the fundamental of your technical interventions, the technical ability that you have to put forward, the policies internally and externally, and the basic financing. I mean, how big of the investments you will need. And this evolves over various types of scenarios, you know, whether you're aggressive or not, whether you're not that aggressive or you're just passive, right? And that also dictates to you the amount of funding that is needed. And based on that, then you devise your financing plan, right? If you want to be aggressive, you put more money forward. You want to be less aggressive, you don't put that much money forward. And how you will be able to achieve those within a certain period of time. If you operate in a regulated environment, which is very ambitious, such as the EU, being the most progressive climate environment in the world, then you'd have to be in tune with those, right? So, and then once we engage with those, it's not part of just the companies, it's part of the broader stakeholder engagement, because once we do these climate roadmaps, then we have programs that we disseminate these results in countries in order to create the momentum and the corresponding investment and community acknowledgement so that they understand. Just to give you an example, right now in Turkey, we are concluding the industrial decarbonization roadmaps for their steel, cement, aluminum, and fertilizers. And we'll be launching at COP an investment country platform, which will combine all those into one single platform so that investors, the governments, but also the companies will be able to understand how to finance them, what reforms will be necessary, and what strategies each company will have to put forward. And with that, I'd like to conclude. I'd like to thank you very much and look forward to the discussion.
Thank you so much, Dimitri. I learned from your presentation that science-based targets and stronger accountability frameworks are slowly becoming the norm. I want to invite the speakers on the scene to have a Q&A session. So please, Sean, Victoria, Dimitri, Sabine. I think we'll have, yeah. Please. So do you have questions? I have the microphone for, okay.
Yes, a potential issuer. Fantastic.
My name is Dragoș Cătălin. I'm managing director of EnergyServ of Romania. I have a general question, but particularly addressing to Mr. Kidney. You mentioned something about pump hydro energy storage in relation to green bonds. The first question is, do you have any reference of such financing in place done so far, or you are thinking about it? And why I'm talking about this? Maybe you are aware that for the hydro pump energy storage, there is no uniform regulation at the EU level. Everybody is doing whatever they think they can do. Number two, pump hydro storage is the largest facility to allow renewable energy intermittent. Without having such facility, it is completely limited and your objectives are limited.
Absolutely right. And we would love to work with you with EBRD to look at financing opportunities around pump hydro. Let me be clear about that.
I will teach EBRD what to do.
To make the transition.
No joke.
To make the transition
No joke.
to renewable energy, we need energy storage. There will be lithium and sodium. In fact, sodium battery will become by far the largest form of battery storage, not lithium, which is much easier in terms of resource supply. And there have been a lot of announcements this week, including from Sweden yesterday, about new batteries coming into the market. But pumped hydro is by far the biggest and most important energy storage mechanism. We have certification criteria available at the Climate Bonds Initiative for green bonds and green finance linked to pumped hydro. Yes, there is some confusion in the European policy, but we're not stopping for that. At least I'm not anyway. What about you?
Yeah, thank you. So in the presentation, I mentioned about the Greek power company, right? When we did the TCFD alignment gap analysis, and we did the first low carbon scenario analysis for them, the phase out of the coal lignite, there was a commitment from the government and the company to phase out within a certain period of time. But you're right, the deployment of renewable had to be accompanied by large hydro pump, right? And we integrated that, right? And once we integrated that, then it became apparent how they would scale up the renewable into their portfolio mix. But at the same time, because as you said, there's no uniform approach to hydro pump storage, for the issuance of the corresponding financing market, they did not go for use of proceeds, but they went rather for sustainability linked performance, which was a metric based on kilos of CO2 per kilowatt of installed capacity or the built-in margin. So we've integrated that. And the corresponding issuance was based on that. And to a large extent, the hydro pump was the key mechanism for delivering, especially in the first 5 years. Right. So we do have experiences of that. And we do have experiences not only within the corporate context, but also within a country context. We're doing that also for Uzbekistan now, which has a lot of water challenges, but has, very big ambitions in deploying large amounts of renewable over the next years. We're doing that in Jordan, right? We're doing that in other countries also. So we'd love to talk to you, and we'd love to understand how we can support you in your long-term low carbon modeling, and corresponding how that can support issuances of your financing.
Okay. Thank you.
Hello, thank you for the presentation. It's very interesting. My name is Leonidas Anastasopoulos. I'm managing partner of Alesonor, a real estate development here in Romania. Alesonor is quite known for many, many years now doing sustainable green community developments in Bucharest. We're actually more or less known for leading that market for around 10 years now. Our experience and what I heard here today, it's really very, very interesting, but our experience in the actual market, commercial market, is not the same. While we come with green credentials, our recent project, Amber Forest, is pre-certified now as LEED at community and city level, at platinum level, and we expect the certification soon enough. Our experience with banks, our experience with the mortgages that our clients are about to take in order to move in Amber Forest is not really what I'm hearing here today. So you said before that, there is the investment, there is the investors that are very much willing into going into green projects. Nevertheless, at the level, our level of investment, we don't see that yet. We don't see the distinction yet. Green mortgages, which is something that had started many years ago, and RoGBC actually was one of the first institutes that was promoting very much this product, had fall short in the market because nobody actually was keen to follow. There was no, as you said, instruments to measure that. And Dimitri said very well that the big challenge will be how we measure things, how we distinguish. At the end of the day, when green mortgages came out, a few banks came out, some of them supported by EBRD, and the level of recognition of a project, it was an energy certificate, which would be A or B, that in our language would mean more or less nothing. So those projects with our project, that was a not net zero, but net positive project since 2014, had no distinction. And people in the market didn't really know. I mean, banks didn't really know. At the same time, at development finance, no change. I mean, banks are happy to talk to us, happy to say they have in their portfolio a green project. Nobody really asks what that means. I mean, we come with things, nobody really knows what it is. And still, financing is getting stuck in a way in other problems that pre-exist in the market. So as a user of finance, my experience is quite far away from what I hear here today.
You're right in Romania, and you're right in a number of Eastern European countries.
We are in Romania, based in Bucharest.
So in this area, yes, it's early days. It's not the case in all markets. We have had a hiatus in Europe of green property bonds as the taxonomy has been adopted, but that is changing now. But of course, for bonds, there's a scale and, well, a size of deal problem. Most of the investors that I'm talking about are the bond market, larger scale investors. They're looking for large deals. So they're not really playing in the equity space or the small loan issues. So it depends on the size of your portfolio. Translating that into appetite by banks, and I'd be interested to hear from our friends at BRD Society Generale in a minute about this, is of course a slow and challenging process because they need to be able to refinance preferentially and so on. That is starting to happen. EBRD, for example, is providing supportive finance for banks in the region to grow their programs of energy efficiency. Admittedly, the bulk of that's in commercial buildings, not in mortgages. Absolutely right. Mortgages are much harder, partly because of the labelling, as you point out. In commercial buildings, the emissions per square metre measurements as a proxy for the European taxonomy compliance that we published around Eastern Europe are, of course, easy to calculate. In mortgages, they're hard to calculate. So in mortgages, we have to look for proxies. EPCs are the proxy. In Romania, it's EPC 1. I mean, I've got a friend here from the Romanian Green Building Council who could talk about those measures. But it varies from country to country because the primary guidance in the European taxonomy for existing buildings is top 15% of that national market and energy efficiency. So you've got to find a way to prove that point. So it requires a little bit of work, I do appreciate, to do it. Having said that, I do think there are opportunities coming through. We're working with the European Mortgage Federation on the energy efficiency mortgage label scheme for banks, which we're talking to regulators about incentives about. That will come through. You'll see some changes, but it is challenging in terms of how it actually plays out at a bank, local bank level. The way it's worked in places like Germany and France and the UK has been an initial green bond has come through from the bank, which is a packaging up for mortgages, and they've got benefits, either increased investor allocation or sometimes price. So when Barclays did its green bond program, which was started off as $1 billion, is now multi-billion sterling of bonds, we helped them allocate EPC 1 and EPC 2 in the UK. As you know, the EPC scheme varies country to country, which are qualifying. And we had to get data from the regulator or approved by the regulator. It took 2 years, but it was so successful, they now have a discount mortgage program, mortgage rate for mortgages that qualify at 25 basis points. It's not huge, but it helps a lot. That's where we're going everywhere. How we get it going in Eastern European countries like Romania is, of course, the challenge, but the necessity of going forward. So we'd be interested to talk further to you about that. We'll also be interested to talk to our banking partners in here. Dimitri, is that a fair comment? Or Victoria?
Since we're in Romania, let's talk about the Romanian market in the context of the broader picture, whereby, first of all, I think we need to recognize that the topic of green is a topic that is still fairly recent. And you have seen Dimitri very transparently put on a slide that EBRD has embedded this concept back in 2006. So, and we have evolved from the energy efficiency to resource efficiency to the green as a concept, sustainability, etc., in terms of how our projects are being benchmarked and how we're able to communicate later on to the market what is it that we do and how we can then position ourselves as with regard to the green bank per se. Now, when we go back to Romania, we need to be honest with ourselves. 5 years ago, 10 years ago, was this really the topic that was very much on the agenda? Did really Romanian companies, the government, put the sustainability as a top of the headlines? These days, and I've arrived to Romania 3 months ago, every event I'm being invited to is all about sustainability in one way or another. Why? Of course, there are regulatory changes, but also, this is what Sean has told us, the world around us is evolving. Businesses need to start thinking about what the climate change is going to do in order to survive sometimes. And I come from a country where I was based in Croatia, where we had huge storms, and you will see later today online, we will have the CEO of Zagreb Holding that had to face the days of storms whereby thousands of trees collapsed, completely closing off the city and making huge impact with regard to the businesses that were operating on the city. Slovenia, which was one of the countries that I was responsible for from earlier this year, had huge floods problems in August, to the point that the roads and the mountain roads were paralyzed. And the Slovenian companies, even though they could operate in principle, they couldn't get their staff in, they couldn't get their products out. And these are the changes that one way or another are coming. And Sean did allude to the fact that in Vancouver, we had the heat waves. Well, it was very hot in Bucharest this summer as well. So, and if you speak about the sustainability of the real estate sector, I have witnessed that actually, if we were to get the temperatures of Vancouver, it would be very, very difficult for some of the residents in Bucharest to survive, no matter how much they have paid for their flats. And I think you are very right saying that the real estate sector, but not only real estate sector, any sector these days needs to adjust, to adapt and look at the future. Now, the second question is, are the investors, and you alluded to the banks more than investors as in pension funds, etc. Are the banks ready? Well, they're getting ready, but we have to be honest. Is everybody ready? Probably not, because if it took EBRD quite a few years to change and adapt our policies and to adapt as well how we measure the success, and why would those companies that actually indeed invest in the green projects would be at the forefront of those companies that will have financing from us. Commercial banks are slowly adapting to it. Some are doing it faster than others. We have here in the room Marilena. Marilena, can you put your hand up? From London office, who is actually responsible for real estate sector. I would encourage you to speak to her and see what options are available when you speak about your specific project. But maybe to conclude, we have to be also very honest and transparent. The fact that the projects can be green and sustainable, they still need to be bankable. And, you know, in the same way as we were speaking about the bonds that will have all of the other features of the plain vanilla bonds, when we speak about green, sustainable, sustainability linked, the loans themselves will have to be fundamentally as well structured in a way with those companies that can repay them. So the bankability is not taken out from the equation, but of course, there are these days more and more banks that are looking to increase their green portfolios. And we see it because we as an investor invest in some of those sustainability linked or green bonds issued by the financial institutions. So the future of Romanian financial sector will definitely be greener than it is right now. And I would definitely say that the trend here in Romania is going in the right direction. But we all need to be patient because this change takes time. The transformation, unfortunately, is not taking overnight, but there is no other solution. We will all go in that direction in the few years to come.
Yeah, just from my side to build on what Sean said and Victoria, and to emphasize again, you are right. There is a gap there on the mortgage side, and from our side, we're working on it. And even though Western Europe might have evolved a bit more, we're still lagging behind in Central Eastern Europe, right, in terms of mortgage and how to label it and how to put it forward in the market as a specific product and what that would mean for banks and investors. And the EU is a little bit behind on it. But I do hope that in the next year, we'll have a bit more clarity and we'll have a more definition of what support mechanisms can come in, also with relation to affordability, right? Because affordability within the Central European context is quite important. So Marilena is here. I mean, I'd encourage you that we have a discussion with her and try and see what specific angle we can bring to you.
Sure, thank you. Just one, please. One follow-up comment about the challenges that we are facing here. And you said about the what would happen in a storm in Bucharest in our project. And you refer to size. Our project is a 120,000 square meters project. It's 700 units, school, commercial area. So the size is quite big. The financing needs of the project right now is at the level of 50 million euros. It's a very successful project. It has been pre-sold at 85%, and therefore it's not a matter of bankability. It's a matter of banks understanding the needs. It's a matter of understanding the extra investments that are needed. For example, we are doing a water basin that is being designed. When I went to the engineers and I told them we need to design a water basin in order to get reducing the risk of a flood in case of a very extreme weather phenomenon, as we saw in Greece last year, what happened, which is something that had never happened maybe for 100 years. And when they came up with a result, I asked them to double that as size. And I asked them to double that because I said, what we have seen in the last 15 years, that was your design. We don't know what it will be in the next 15 years. So all these extra investments that are needed there, it has to have also somehow a pricing benefit on financing in order to be able to cover the cost. Speaking about bankability. But if there are no tools there in the market to be able to judge that, then all these efforts will just remain in the dreams of every company that just wants to do something extra, and eventually will die if nobody recognizes it. So we are discussing with Marilena for some time, and we are in discussions about it. So thank you for the proposal. Just wanted to point out a problem which is actually from the market. Thank you.
Well, I want to be very clear that what we're essentially talking about is educating the market about differential default risk. There's been a study by the Bank of England of millions of homes in the UK, which looked at relative payment arrears across green buildings of mortgages versus ones without. And it was very clear in that study the Bank of England published, was on their website, which showed that homes that have energy efficiency measures, are highly energy efficient, have a lower default risk. It's as simple as that. And that's, of course, the argument we need to make and educate. It is not understood by banks in most countries. You're absolutely correct. It is one of the things that central banks, through the Network for Greening the Financial System, are trying to educate the market about. We will see some incentives coming through. In some places, we'll see regulation against it, not in mortgages so far, but in the Netherlands for commercial buildings, the central bank has banned loans to energy inefficient buildings. Banks are not allowed to lend to them. We're going to see more of that. I mean, it's only EPC, DOE, I can't remember the figure now, below that, but you get the idea. These things are coming through the system. Of course, the argument we're making to investors and to banks, get ready. Be prepared. There is increasing default risk coming through for mortgages for people who can't afford skyrocketing energy bills that go up and down. If you've got an energy efficient home, your energy bill is going to be less in the summer when suddenly there's an invasion of the country next door and energy bills go through the roof, let alone in a summer where heat starts becoming 50 degrees for weeks on end and everyone's trying to cool everything in. These are default risk issues. And that's the argument we need to run everywhere. This is about differential default risk going through. And the only question from a regulatory level at an incentive level is what we're going to do, not if, but what we're going to do to enhance measures to reduce forward default risk in the future. And so watch this space, but I appreciate in the meantime, you've got your immediate financing needs and it's not widely satisfactory here yet. Fully appreciate the issue, but it's the way we're going. And I say this to all the banks. All banks should be washing their portfolios with climate adaptation and climate impact data sets to look for properties that are more at risks from floods and heat, just to understand differential risk. Many banks are. Banks like Barclays and HSBC and Societe Generale have already been doing this. There's now data available from independent companies and from companies like Moody's, which allows them to match their mortgage portfolios against new data around the likelihood of climate impacts and differential. That's one form of understanding of default risk. And then, of course, the measures you're taking should reduce risk issues. It's about the procurement going forward and procurement of existing buildings and what we can make changes to reduce that risk going forward. That's really what it's about.
Thank you.
We need to wrap up. Sorry, Gabriella, but one last.
Yeah, one last.
From an activist in the room.
Thank you for all the presentations. I promise we didn't coordinate together with Leonidas here, but we do know each other. He's absolutely correct. He's been an industry leader as far as building fantastic green buildings and economically successful, which is as important to grow the market. Just very brief background. I run a nonprofit dedicated to promoting green buildings called the Romania Green Building Council. We launched a green homes and green mortgage program. It's heavily supported by the European Commission. We've exported that program to 14 countries. We have in Romania 3 billion euros of housing projects that are either certified or in the process of certifying to very high levels. Leonidas talked about LEED Platinum. That would be the comparable level. So the idea that an EPC is somehow the proxy we should be using, the good news is that is not true. It's absolute. If you look around, you absolutely would see problems in the building sector. Let's be honest. At the same time, but we're well beyond a niche in this country. We have affordable houses, mid-market houses, luxury houses. The problem we have is if we're undercut in our green homes and green mortgage program, we're setting lower standards. Right now, our program has 10 banks signed up. We don't have a problem with volume, with deals. We have 3 billion euro in Romania. We actually have a lot more potential. The problem we have is a lot of those are sold before a mortgage is issued. They use cash. Maybe they find a more discounted mortgage from a government the Czech bank, the agricultural bank. There's been a lot of reasons why green mortgages success have not reached the success of the green certificate, green homes. So I want to say, very clearly, this market is very evolved, not across the board, but there is, at that level of volume, we have the volume to do it. We're just, we talk about climate crisis. It seems like there's a disconnect with if Ukraine is going to be off of Russian fuel by end of 2024. They're currently transiting through the country. All of the countries in the region are still using it. And I talk about Romania, but all the countries have the same story, which is, well, we want to put forward a lot of green bonds. We want to have a lot of green mortgages, but it needs to be, the order needs to be shifted. We need to basically set the standard. We may have a bad year of volume because not everyone is ready to meet the standard. But if we have a bad year of volume at the right standard, we will have many years. And the alternative is we lock in a low standard. So I think that's again, I say it in an optimistic tone because I think banks need to be the heroes of sustainability. They'll bring forward the resources early in the process to invest. But right now, after this conference, I'm going to go to an NZEB conference in Romania, probably about 30 practitioners, many I've worked with for many years. They are ready. Not everyone is ready, but people will not be ready if we keep providing loans for substandard housing. We meet the EU taxonomy. We're also an open standard to work with LEED, BREEAM. We don't care which standard they use. We just want it to be high. And so I would just say there are a lot of other Eastern European countries in the same situation, which means the building stock in general is not high performing, but there is a sufficient enough industry in each of those countries to loan to. I can't guarantee that we'll place all the financing if people don't want a mortgage or developers don't want to do it. But I think in a sense the institutions need to be the ones to set the high standard. Green finance is voluntary. It's not a mandated building code. So people don't need to take it. But that's, so again, I say it in an optimistic tone because I think this is exactly the conversations we should be having. But definitely, and it's 8.5 billion across all of the countries as far as volume, a small fraction of the total housing market, but no one can say it's a niche market. So I just want to, say, and very happy to work with anyone.
Thank you. Thank you for that question.
Well, from what I understood, it's not really a question, but a statement rather than the question. But maybe the good thing about this type of questions is that it raises more ideas, because one of the previous questions was probably alluding to concessional financing and how much subsidy one can expect. At EBRD, we are not providing concessional financing unless this is for the markets that actually probably now watching us in the hybrid format, which are what we call early transition markets. In the EU markets, EBRD is really at this point in time providing only risk sharing instruments, but not concessional financing. Having said that, it's probably a topic for the discussion with the policymakers. And this is something that I have well noted, as well as the discussions that maybe need to take place with our partner banks. Because EBRD is providing still credit lines or providing certain type of investments in the bonds that financial institutions are investing. So we can have that conversation. But I think this type of dialogue is extremely important, because being a public sector bank while also caring for the private sector needs and the development, it's really interesting for us to take this feedback away from this type of conversations. I think at this point in time, we all need to move into the coffee break so that we can continue with the rest of our agenda for today. Thank you very much for all of the questions, and thank you for the panelists as well. And looking forward to seeing you in the next, well, let's make it 10 minutes, right?
Yes.
Thank you.
Fine. You can take your coffee here in the room if you want to. Hello, and thank you so much for listening and engaging with our guests. We are now moving to the next part of our event, two excited moderated panels. So I will invite you to please have a seat, and I would like to announce the panels for today. That's great that we have a lot of discussion and the people is very interested on the subject. I would like to welcome the first panel, Green Bonds and Sustainability-Linked Bonds in the Corporate Sector, moderated by Victoria Zincuc, Director, Head of Romania EBRD. I invite also to the scene the following speakers, Magdalena Caramila, Director of Sustainability, Autonom Group, Iuliana Tiba, Director, Environmental, Social and Positive Impact, BRD Group Societe Generale. And we also have a remote panelist, Najima Ayubayeva, Business Officer of the IFC. Thank you to our panelists for being here today. Enjoy.
Let's see if it works. It does. Okay, let's continue with our discussion and bring the discussion closer to Romania with two of our panelists being here on stage, and then reach out as well to our third panelist who is joining us remotely from Kazakhstan. So Magdalena, I'm sure you are being asked hundreds of times, how did you do it? How did Autonom decide to invest in sustainability-linked bond? It's been now 2 years since you have done this investment, and we are one of the very much proud investors in the bond. I'm interested in your views how the business fundamentally has changed, if at all, since you have decided to proceed with this issuance, and if you are planning to do more of similar sustainability linked or green bonds in the future, and the reasons if you were to do it.
Thank you, Victoria. Good morning, everybody. It's a pleasure to be here and honored to be part of any educational project, I would say, because we consider it to be part of our culture. This is one of the secrets that would answer your question. Because I used to say like 3 years ago, and actually today we understood that 2 years ago we were working together, structuring our sustainability linked bond framework. But looking back, it seems like an easy process. At that time, it was not for us, and not also for our supporting bank, but it was a learning process. And what we could understood later on is then when you prepare and take all the necessary steps, opportunities appear and you just take them and even take it to the next level. What I would mean by that, we have at the moment the largest fleet in Romania. We have more than 17,000 vehicles. Our fleet was half back then. But we understood for real our impact when structuring our sustainability strategy that year. And we did it best practice guide, because we set up all the 3 pillars and targets and KPIs, and having this clarity and transparency in also for the past, but also for the future, helped us choose the right ones. Also when structuring the framework, the SLB framework, because like it was previously said, you need to have KPIs that are relevant, that are transparent, and that can be benchmarked. coming back to our case study, it was not easy because this was exactly the main challenge. We had no benchmark at that time in our industry, and we had no best practice. We tried to extend the Romanian level and go to European level and then international one, and try to adapt and see what we can take here on the local level. And the challenge became our main opportunity, because after that, we understood that we do not need to search only the local market and extend our vision to European context, international context, and even be the first ones in our region. And this is why our issuance was a success, because we decided to align it with European benchmarks and levels, and be even more ambitious that the normal Romanian market would require at that time. Doing this and getting a little out of the box the Romanian market helped us grow in confidence. First of all, what we did, we consolidated our relationships with investors and our partners, and we could always see one step ahead and always focus on the next thing to do. Last year, we continued learning, and last year we got another green loan, this time from a European Investment Bank. But this was not possible if we did not have done the previous steps like best practice model.
Thank you. So now over to Juliana. Tell us how Romanian market looks like. So we have heard Sean speaking very optimistically about the possibilities of the future developments of the green, sustainable, sustainability-linked bonds markets in Europe globally. But how is Romania performing in this sense? Do you have many companies coming, tapping on your doors? Can you tell us if there are any sectors that you can maybe just differentiate and say, okay, in this sector we see more demand, or we don't see any demand in this sector, while maybe they're missing the opportunities? So looking forward to you commenting on this.
Thank you very much, first of all, for inviting me to attend to this event. And I am very honored to be together with you, with Autonom and EBRD, with whom we worked very closely in the transaction that was mentioned by Magdalena. Now, coming back to the perception we have about the market, if we talk about the sustainable finance, of course, we could admit that we are still at the very beginning of the market, but still we could say that steps have been made in the last years, and the process is accelerating. For example, in our case, BRD Group Societe Generale, since the very beginning, wanted to be recognized on the market as a pioneering bank, promoting the green finance offer. And when I say green finance offer, I refer to the all range of products, loans, bonds, or even trade finance type of instruments, which have a kind of label like this, either green or sustainable or sustainability linked. Okay, we started this journey a few years ago, in my case in 2019, very much building on my previous experience in structured finance. And at that moment, together with our group, we practically arranged the first green bond issues for exactly for real estate companies, because it was quite interesting to hear the discussion around this subject before. So actually our group was at that moment the advisor to two investors, real estate investors with a very important footprint on the Romanian market. to, let's say, set up their green bond framework, and their green bond issuances afterwards were quite successful. And we talk about a transaction of around 1 billion euros, which is a very important amount to start with. So one of them had 500 million and one of them 400 million. So I would say that this was the starting point. The real estate was the sector that somehow was the first one to move in this direction. And if we come to the current market situation, I would say that yes, there are some sectors which are more, let's say, advanced in terms of accessing or requiring us this type of financing. For example, and I suppose it's not a surprise because we are right now facing an energy crisis, and the energy sector is one that is driving somehow the green finance offer. And we have all sorts of clients, from small ones to large ones, willing to access green finance for either photovoltaic type of projects or equipments rather. And this would be one of the sectors. The second one, I will still consider real estate as a sector with expressed interest. And here, somehow to address the point that was raised before, is to say that our bank last year concluded some very, I would say, large transactions in the field of real estate. One of them addressing the residential market. We also have the green mortgage facilities that were mentioned before based on ROGBC certification. So indeed, maybe the market is not as developed as in other more mature market, but still we see signs of development. Other sectors are in the field of municipalities, where the projects could have a green or even a social component. Also, I would say in the waste management type of activities, or in clean transportation. I was about to forget exactly the one of the drivers that also we believe that will require either green financing or sustainability linked type of facilities.
Thank you. So very optimistic view then of the demand side. And given that investors are willing to invest, I'm wondering in a year from now how the numbers will look like. Probably we should have a recap in a year from now to say where Romania is with regard to the new issuances. So let's see. I would like to ask Nagima Ibayeva, who is a Chief Business Officer from Astana International Financial Center, to join us. Nagima, you represent, I understand, government-owned organization, and you're covering the whole of Central Asia. Tell us a little bit about your activities, and also can you give us an overview of the markets? And when we speak about the market, not just Kazakhstan, but all of the Central Asian market, what is the potential for the green bonds or sustainability-linked bonds, sustainable bonds issuances in your region? Who are the investors? Who are the issuers as well? Do you see any trend in terms of the sector split? And what are the key challenges that you experienced in your market? Thank you.
Yes, thank you very much. Good day, everyone. I would like firstly to take this moment and thank the EBRD and Climate Bonds Initiative for all their hard work and the launch of this Financing the Corporate Climate Transition with Bonds Practical Guide. and also for providing such well-organized and informative panel session, as well as for this opportunity to speak. So my name is Nagima Ayubaeva, and I represent the Astana International Financial Center's Green Finance Center. And my role within the GFCs include like spreading knowledge about sustainable finance instruments, as well as luring green issuers, assisting them on their sustainability journey, and forming alliances with different interested stakeholders and organizations, as well as drafting documents. So as you know, like I'll talk a little bit about our Green Finance Center first. Astana International Financial Center is a driver of financial innovation in the region and beyond. It provides reliable infrastructure and jurisdiction, unique products and services for doing business, and it also attracts local and foreign investments. And the Green Finance Center was established as a part of AFC's ecosystem, which is responsible for the development of sustainable and green capital market. So we act both as a development institution and a service provider. As a development institution, we stood behind the development of national green taxonomy in Kazakhstan, as well as subsidy program for green projects, and we stood behind the first green bond issuance in Kazakhstan. So currently our market stands at about $600 million US, and which is represented both by green bonds, social bonds, and green loans. Also, as a service provider, we cover external review of all thematic bonds, and 60% of all green bonds and loans in Kazakhstan were verified by our center. I'm also very proud to share that we are accredited by 2 global standard setters, which are ICMA and the Climate Bonds Initiative, and we are the only institution in the region to have this accreditation. Also in May 2021, we became the regional office of Belt and Road Initiative's Green Investment Principles. And our center also holds like first place among Eastern European and Central Asian countries in the Global Green Finance Index. So like speaking about the market, like in Kazakhstan, the market for sustainable finance is at stage of its development. Like 3 years have passed since the debut issue of green bonds took place in Kazakhstan. Like more precisely, it was in August 11, 2020, when the Damu Fund placed its first debut green bond issuance on IFC exchange. So thus our market is only 3 years old, and although it's young, it's nevertheless like already quite systemic. First of all, because our regulatory framework is fully compliant with different international standards, like among them this ICMA's principles and guidelines, Climate Bonds Initiative's taxonomy, like our local national green taxonomy. And as I already mentioned, currently the Kazakhstan sustainable finance market is worth about $600 million. And green financial instruments, including green bonds and green loans, they accounted for almost 70% of the total volume. And the majority of sustainable bond issuance comes from international financial institutions and development banks. So like due to this date, like the largest issuers include Asian Development Bank, the Eurasian Development Bank, as well as portfolio companies of the Samruk Kazna National Welfare Fund, such as Samruk Energy and Kikok. However, this year we also see the huge interest from SMEs and large private companies, and like we hope to see some interesting offerings, sustainable bond offerings from private businesses before the end of this year. Also, like we not only, like as you already mentioned, we not only work and cover Kazakhstan, we also work with other Central Asian countries. With our support, first green bond and social bond issuance took place also in Kyrgyz Republic. It's like Bank of Asia, they issued their first social gender bonds, and Doskredo Bank, they issued their first green bonds. Also, like we are helping for Kyrgyz Republic to draft their like taxonomy, and also we negotiate with Uzbek Stock Exchange also to make to help them to create their sustainable stock like segment on the exchange, and like the same we did with in Kyrgyzstan. Also, like generally speaking, like of course some challenges arise due to the undeveloped like capital market. Also, we have some inefficiencies existing current subsidy program for SMEs. also high national bank base rate, as a result, high coupon and like interest rate for bonds and loans, high transaction costs associated with issuance of sustainable finance instruments, also insufficient number of institutional investors, currency risk, and etc. Like, nevertheless, there are some support measures also for ESG bond issuers in place, such as large discounts for verification from our side as verifiers. Also, financial support measures exist on the side of exchanges. For example, both CASE and AIX, they waived the initial fees for ESG bonds. Also, we partnered with some underwriters and brokerage firms to provide some discount for ESG bond issuers. And in general, international financial institutions such as multilateral development banks, they demonstrate strong support for ESG related initiatives. And like in general, if just to say that, like, we believe and we see that our market have strong like growth potential for different type of sustainable bonds. It's green bonds, social bonds, because we also currently drafted the social taxonomy, like one of the markets who did this, like who drafted this taxonomy for the first time. Like, and we hope that social bonds we will have in future social bonds, and we hopefully will have also by the end of this year maybe first sustainability linked bonds. So yeah, we see that positive trend in terms of issuance of all sustainable linked instruments. Thank you.
Thank you, Nagima. So as you can see, EBRD is quite active across all of our geographies. And here, the important part that I want to emphasize is that knowledge sharing is really one of the key cornerstones of our activities. So EBRD is known as a lender, both to private and public sector, but our advisory work cannot be underestimated. And clearly you can see that we are providing this support across so many geographies. And in this context, going back to the topic of today's discussion, so we have issued this guidebook, which is now going to be on our webpage, accessible to everyone looking how to invest in the green, sustainability linked bonds. I'm curious, Magdalena, and I don't know if you read the guidebook, probably you haven't, but assuming that you know what this is about, how do you think this could be useful to the people within the organizations, within the companies? Because, okay, now when you're in charge of sustainability activities, it's easy, you know what to do, but fundamentally you need to align everyone. Of course, from the owners, the management, the board, but then to those individuals that have to work in line with the target that the management or the owners set up and say, okay, we need to work on this bond, but we don't know what it is. We look at Google, we talk to the advisors, but would this guide be really a useful tool for the companies or for their offices, for the operational staff within those companies? And do you think there is anything else that needs to be done in order for stakeholders such as EBRD to educate the market? Because fundamentally, this knowledge sharing is extremely important. These events are important, but it's also important for us to make sure that this knowledge is indeed then embedded within the organizations at different levels.
It's true, the market needs to be educated, but I think the most important is we need to educate ourselves. So this is why, coming back within a company, yes, it's a process. It's not only a person. We could see it very clearly while reporting, because the next step after issuing the bonds and setting this ambitious target, we needed to implement it, and then to follow it through, we decided to report voluntarily. We're not in the mandatory field, but it helped us within the company because we started to understand why we need to do it. If you come as an enforcement, it's not will not be embraced by everybody, at least not in a culture so autonomous as our culture. So yes, you may change the climate. I mean, you may put everywhere in all the offices these boxes for recycling, or you can collect data, but they need to understand why you have to go into small habits. If you want to eat an elephant, you need to cut it by pieces. So these practical guides will help everyone understand the why we need these things. We need to monitor the progress towards the target, and how can we contribute, each and every part of the team, I would say like this.
Thank you. And to conclude the panel, Juliana, tell me, what else can EBRD do in order to improve access to financing for those companies that are considering potentially to invest into green, and now the topic of today's conversation is bonds, so let's stay with the green bonds per se, but also how can we bring the market closer to the need for this continuous education? And also another question that's probably a little bit different, do you see that their junior bankers, their financial officers that come through the educational system, do they know about these trends? Are the universities, the business schools, are we talking about these topics? Because we can see that in Romania, this is an emerging topic. In Central Asia, this is an emerging topic. We within organizations are readjusting, readapting, but are we doing enough as well to educate this young workforce that ultimately will come and work in our organizations and will need to drive this change? Is there enough that is being done? Should we consider going forward to bring their educational providers to the table so that they're able to learn from the practitioners?
I think that increasing awareness is a very important element, and this should be done by each actor of the market. Either we are financing institutions or corporate clients or even public authorities. I think that we all should get together within a platform like this one or similar ones in order to increase this awareness on this type of topics. And this will contribute to the, first of all, to the change in the mindset, accepting that there is such a transition to go through together, and only collectively we will be able to achieve those objectives. And I think that coming back to your first questions, what EBRD could do, for example, the technical assistance you have indicated before as a service that could be provided to the corporates or issuers or even municipalities in order to get prepared for, let's say, being ready to issue or tape this type of markets. I think it's a very important one. Afterwards is the whole cooperation with the public, with the private banks, and to enhance through different instruments, as you already indicated, and we know that there are available, the penetration of this type of products. Now coming back to the need of increasing awareness from a very early stage, I agree that this should start somehow in school and in very early in the process. In our case, for example, BRD Group Societe Generale has this kind of program for, let's say, financial education, and to which could be added, for example, elements that covers sustainability too. And I think that by spreading the knowledge, the information about risks, but also opportunities, in the end, we will all be more prepared to tackle these subjects we are covering right now.
Thank you very much, Juliana. You mentioned municipal bonds. I'm actually planning to see what we can do to incentivize municipalities to issue more bonds per se, and definitely more green and sustainability linked bonds in the future, because EBRD's portfolio in municipal sector is quite impressive, and would like to increase it further with the investments that could be seen on the capital markets, because I think that municipalities can definitely have this capacity to drive the market forward, in addition to private sector that we always will support going forward. So with this, I would like to ask the audience if there are any questions before we move to our next panel. Okay, no questions. So we will pass the floor now to our moderator, who will invite the next panel. Thank you.
Thank you very much for the very interesting discussions. Moving forward to the next panel, Energy Solutions and Financing Frameworks for the Climate Transition, moderated by Sean Kidney, CEO of Climate Bonds Initiative. I would like to invite to the scene Alexandru Chiriță, General Director, Electrica S.A., George Hotar, CEO of Photon Energy Group, and also welcome to our remote panelists from Zagreb, Dubravko Karacic, CEO, Zagreb Holding. Towards the end of the panel, I invite the audience to submit their questions to our distinguished speakers. Thank you.
Thanks, Gabriela. I'll just sit here. We have, you've heard the introduction to the speakers. What you don't know is perhaps what they were working on. You know, Photon, and I'm going to do this because I want them to go straight to questions and comments and avoid too much introductions. I mean, Photon's an interesting company listed in Warsaw and Frankfurt because it's got a variety of investments, energy and water. When you do green bonds or green finance, it doesn't need to be in one specific area like clean energy. It can be a mixed portfolio. It can be pumped hydro with water investments, with energy investments, with grids, with green buildings. You can mix and match. And certainly banks have been doing a lot of that because they tend not to have enough assets in one particular sector to qualify for issuance. So to get scale, they put things together. And remember that refinancing qualifies. So refinancing existing assets that meet existing criteria are also eligible, not just new projects and so on. And then, of course, Zagreb Holdings is a very interesting company because of the nature of water. And you heard earlier the comments from Victoria about the impact of climate. It's much more severe storms on Zagreb's portfolios in terms of collapsed trees and the need to invest in resilience going forward. And then for Electrica, we've got distribution grids is what I'm interested in here. I want to get some grid bonds in the market. Now, I don't know if it's going to work for them, but we need to multiply by 4 times the electrification of the European economy by 2050. 4 times. Of course, that means vehicles, which are all going to be electric by 2040. But it also means heating in homes has to we need to remove the gas and shift to various kinds of electricity-based solutions and things like heat pumps. And in industry needs to shift from fossil fuels to electricity options. There's a huge amount to be done. For that, we're going to need grids, improvement in grids and changes in grids investment. So that's why I'm so excited to be on this particular panel today. But look, the question I have for each of you is, what are the transition challenges and work that you're already thinking about? And of course, what are your financing needs? Because we need to be thinking about how we can support all of that program. Sir, I might start with you.
So good morning or good afternoon. I think it's past 12 o'clock. So it's a great pleasure being here. Well, we are a company that has been, since our formation 15 years ago, involved in the creation of solar assets. So we cover the whole value chain from development all the way to the construction and investment into power plants. We operate them. But the energy industry is changing. And in the context of that, last year, we decided to take over and integrate a company in Poland called Lerta, which is involved in the energy market and in what I would call the hotspot of the energy market, with the reduction of baseload capacity, whether that is the exit of nuclear in Germany, but also the retirement of coal assets across Europe and actually worldwide, and the increasing share of intermittent energy sources like solar and wind in particular. Balancing the grid is becoming a massive challenge, and I think it's probably every week, every month, definitely on a yearly basis, this will accelerate now. So this acquisition has brought us a virtual power plant, which is essentially software that is able to integrate and manage as it's a software, theoretically infinite number of energy sources and consumers and balance their respective supplies and needs. We have also become, through this integration, the third largest provider of demand-side response services in the Polish market, where through an auction mechanism, the Polish TSO contracts various types of flexibility, one of them being demand-side response, where we act as an aggregator. So basically, we contract capacity with the TSO, and the other hand, we find and sign agreements with companies of various sizes, so from SMEs all the way to steel mills. And when the grid is in trouble and the Polish TSO requests flexibility through that large number of energy users, we are able to respond by reducing in a coordinated, concerted way demand for electricity. We have also gained through this integration energy trading licenses across the CE region, including Romania. So we are also looking at essentially extending, when I was talking about that we cover the whole life cycle of power plants all the way to energy offtake, selling electricity in the day-ahead market, but also now more and more matching that with energy consumers, either through our own energy trading activities, or I think more and more we'll also be trying to find corporate off-takers that are interested in green energy and would enter into longer-term commitments. And last but not least, there's definitely now also a major shift in our focus to not only cover utility scale solar, but behind the meter solutions. Some call it CNI, as in commercial and industrial. Essentially, one of the main advantages of solar, which by the way is also why we never looked seriously into any other of the renewable sources, is that you can bring the production capacity very close or to the point of consumption. So building on that advantage, we're now stepping up our efforts in creating solutions for medium and large scale energy users to generate electricity on site or near site. Clearly a topic now is to also add storage so that the systems can be better matched with the demand of those energy users. So this is a sector that is very important for us. And actually, probably later today, I'll be signing our first behind the meter PPA with a corporate customer in the CE region. That's a 20-year PPA on site. Happens to be in Hungary, but we're coming close to Romania. And so we see that as the first step to scale this part of our business up, and we see significant demand at the moment driven by multinational companies who of course are trying to implement their very often global ESG policies. But what we also see is that with scope 1, 2, and 3 becoming more important, we're observing that the financial sector and banks are actually having a much closer look at their loan portfolio, and will be increasing the pressure on companies that are in these international supply chains to make sure that they're actually positively contributing in the needs of their final customers. And there will be significant pressure. So behind the meter is definitely, as I said, increasingly with storage is a massive topic where we are committing a lot of resources to meet that demand.
What percentage of your portfolio would be clean energy and grids now?
Well, we currently have 123 megawatts connected to the grid, of which 31.5 are here in Romania. We have another 20 megawatts that are physically built and waiting for connection. And for the time being, with one or two exceptions, that's all utility scale. But clearly we see we are shifting our focus away from utility scale or utility scale only. Wherever possible, we'll be trying to add storage. So we'll be investing into developing and investing into hybrid power plants, so PV plus storage. We're also already developing storage only projects, and we also expect more and more of that to be behind the meter. So that's at the beginning, but it's coming up fast.
I asked because early this year we issued a new form of certification in the market, which is for companies based on the nature of their forward CapEx plan. So they can now get certification as an aligned entity or a transition entity, subject to annual reporting, which would mean that for the purposes of the climate transition and green finance market, everything they do would qualify in the financing, as in any kind of debt or even equity capital raising as well. And we've got a few companies that are seeking this out. We'll be introducing in the first quarter of next year the specific criteria for energy utilities. And so this is just an opportunity. So if a company in this particular market can issue use of proceeds bonds, that is where a bond is issued, where they're allocating the proceeds to something like clean energy or pumped hydro or whatever, or they can get a corporate branding, which means that everything they do would qualify, which is a slightly different approach globally and consistent with the regulation coming in around transition plans going forward. So just a thought for the future. But let me turn to Alexandru, who has, of course, also an extremely interesting portfolio for the purpose of this conversation.
Thank you so much, and thank you for having us here. I want to congratulate everybody on the report. I had the chance to read it while I was waiting. It's very important to have this kind of documents, first of all, for education. It's something that we always put it first. It's a very clean document. It's easy to understand. It's very helpful, and I think it's a big step forward. For Electrica, we had, I think for years, the most investments in the distribution segment. From the listing almost 10 years ago. It's something that preoccupies us daily, of course. And you are right, we need to make investments in the distribution segment, in the networks, so we can keep up with the developing stages of the rest capacities or other capacities that are available. It's something that we rose even 1 week ago at the meeting we had within the European Parliament. And we asked the question, what segment should come first? The rest production, the networks, or the storage? Of course, the answer is all, but we can only have so much money available for the investments. We have to make a balance. For our portfolio, which is our strategy for the next years, is to develop the rest capacity so we have more green energy. One way in which we want to do this is attract investments through the issuing of green bonds. And if everything goes well, and I believe it will, hopefully by the end of the first quarter in 2024, we will have an issuance on this matter. And we can provide more clarity on the subject. It's important because we have more than 3.3 million customers on the supply business. We have 40% of the territory for the networks. And it's a big responsibility for us to ensure the sustainability of the company. We need to ensure that ensure its growth and also its stability.
So as you can see, change is happening anyway. What we're trying to do now is to support companies like Photon and Electrica to raise capital more easily, to turbocharge and speed that change. I mean, I would like to advance your issuance earlier in the year, but you've got your capital investment plans, you've got to make work. We'll have that conversation afterwards about it. The critical thing is we need a lot of capital to flow fairly quickly if we're to meet our climate goals. So everything we can do to speed up that CapEx plan is going to be really important. But at the end of the day, there's only so many engineers and so many jobs we can do on the ground. So that's our limiting capacity. Although, is it really? Let me ask Dubravko, and thank you, Dubravko, for coming in from Zagreb. It's important to note, by the way, in our room in Bucharest, there are a lot of people online. I've been fielding emails for the last couple of hours from people who are watching. So on your toes, everyone. There are people watching in Madrid and London and Frankfurt right now. Of course, Dubravka's part of that online audience. You've got a very different kind of portfolio. You fall into our definition of municipal because you're owned by the city of Zagreb. So municipal finance is not just the municipality itself, but it's entities owned by the municipality or delivering service to the municipality. But you're in the water and waste management, and you've had some real challenges. Tell us about your, let's call it, transition challenges and plans. And of course, your capital needs, Dubravka, because we want to try and help on that.
Okay. Thank you for invitation. Thank you, Victoria and EBRD for calling me to this event. It is my pleasure. Just a little bit flavor of Zagrebački Holdings, ZGH. As you already said, we are 100% owned by the city of Zagreb, something around 600 million euros of turnover, 7,000 employees. We are covering 10 different business services from waste management, water distribution, cemetery services, gas distribution, landscaping, and etc. What we had last year, I would say, a major transition in our mindset and our approach when we refinanced 305 million euros of existing conventional, I would say, standard bond with the new bond with the SLB character. We choose two KPIs for this bond. One is, I would say, both of them are natural. For us, one relates to the waste management, where we are going to increase of waste management sorting from current 37% up to 58% up to 2020, up to 31st of September 2027. And the second one is, I would say, independence in electricity, where we would like to increase our currently using energy sources from renewables from 50% up to 70%, where this 70% will be majority relating to our photovoltaic sources. This is extremely important for us, for the waste management company and for the water company, as we use this electricity as a main resources. For our water management company, electricity expenses relates to something around 40% of the overall total expense. So these are the two main KPIs by which we communicate to the investors what we are trying to change and how we are going to change it in the next couple of years. When you say ask for some additional transitional challenges, of course, it relates to overall organization, as we identify ESG aspects are part of our DNA, and we want to clearly demonstrate this and communicate to the investors community and to the citizens of Zagreb.
And tell me, Dubravka, how did your SLB, your sustainability bond, go? What was the treasury response? Successful,
It was,
so-so?
I would say from our view, it was very, very successful. It was something around 50% oversubscription with the interest rate, which is favorable to us. It is a 5-year bond with the bullet payment in July 2028. I would say that during the roadshow, everybody said we are going to underwrite if we are going to have interest rate something around 4.5, 6%, and etc. We ended up with 4.9%, which is for us huge, massive, I would say, success. And I must say it wouldn't be possible without the pivotal support of EBRD and the IFC, which recognize our transitional change, especially in that SLB part, and they underwrite something around 45% of overall issue. But the local community, the banks and the institutional investors, they also, at the end of the day, accept this price range that we set. And I would say they accept it really hardly. They need to be cut.
So that's a very exciting tightening against expectation in terms of the cost of capital.
Exactly.
I need to stress to everyone that this isn't necessarily because of sentiment. That in secondary markets, we see these instruments, green, social, sustainable, SLB bonds, performing better. Whenever there's a downturn in the market, these thematic bonds hold their value. And in March of 2020, when we saw global bond markets freeze, US Treasury markets froze for 2 weeks because of the COVID crisis. I had investors phoning me from New York and saying they were still getting bids for green bonds, i.e. green and sustainable bonds remained liquid when even US Treasuries froze. This means they're a premium product for investors. They have superior secondary market characteristics, liquidity, and valuation as a result. And that's what drives primary price differential. That drives appetite for differential pricing by portfolio managers. It's not because they're trying to save the planet, although I'm sure for some of them that is the case. It is because of this characteristic. So bear that in mind. Of course, there is also significantly increased asset owner demand for these kinds of investments to meet their concerns about shifting their client portfolios. There's multiple issues going on here. But I'm going to say, Jorg, I don't know where you've been tracking pricing differences, but I imagine that Dubrovska's experience is quite an attractive story to tell. What are your capital raising opportunities for investors like this year? What are your needs, if you like? Are there things we should know, both on the bond and debt side, and of course, as I mentioned earlier, equity capital raising is now part of this story as well.
Well, first of all, as we are a publicly listed company, there are limits to what I can say. But I think one of the reasons why I've been invited to this panel is that we have actually gone through a green bond issuance now pretty much 2 years ago, which in total has been our third bond that we have. We started issuing bonds in the German capital market back in 2013. And the green bond, which we issued 2 years ago, was our first green bond as such. I think it's important to point out that we actually went through an issuer rating. So it's not only the instrument that has been rated, but we as an issuer have an ESG rating, which a few months ago we actually defended, and we went from 75 to 76 points. And in this green bond issue, the EBRD was the anchor investor, also in 2 taps that we did subsequently. So So we've gone through this. So this is the experience that I can definitely talk about. Clearly, we've seen that we've been able to increase the universe of investors. So a lot of our investors, besides the EBRD, are financial investors, but also family offices, mainly in the DACH region, so Germany, Switzerland, Austria, also a little bit of Scandinavian, Benelux. And clearly, we've seen, compared to the previous issue, a significant increase in appetite in the issuance. At the moment, we are very much in the mode that we are raising finance through project level financing. And clearly there we also see that banks have a growing appetite to finance renewable energy projects. I think the big topic for renewables and solar in particular at the moment is with the disappearance of government support in the form of feed-in tariffs. Now the question is, what is the revenue model of a solar plant? So I would say what has been developing over the last couple of years is power purchase agreements. But we have actually made a decision about two and a half years ago to go down the merchant track. So we're actually building power plants without a power purchase agreement in place, and we are selling into the day-ahead market.
Taking on the risk fully.
Yes, well, of course, we always have the option to sign PPAs. You know, I mean, for 3 months, for a year, for 5 years, whatever may seem interesting at the point in time. The important thing for us was to get out of that loop where you have to sign a 10-year PPA before you get the financing that allows you to build the asset, and that was quite difficult. But also there we've seen a significant shift. I mean, I think the EBRD itself is actually a great example where over the last year, I think today EBRD has gone from having done the first project, I think 18 months ago, that was a pure PPA, a pure merchant project, and now I think it's even almost the preferred model. So clearly that this is a thing where the EBRD is playing the role of going where commercial banks are not willing to go either yet or at all. I think I see a similar dynamics now also with storage, which is extremely important. But the first 8 power plants that we built and connected here in Romania, we financed with well, it's public knowledge, with Raiffeisen Bank, which for a while stopped financing renewable energy projects in the region for about 3-4 years. And themselves being listed, the pressure from ESG conscious investors was increasing. So they were kind of now still in this catch-up mode, because analysts and investors asked them, you know, all the other banks are increasing their share and you are not doing nothing. So now they're kind of trying to catch up. So they came up with it. So from our point of view, from our information, they were the first commercial bank in the region who actually had a policy for financing merchant projects, which is actually what they did with us here in Romania. So I think this was the first project financing for solar assets in 8 or 9 years, and at that it was actually a merchant-based project. So clearly the you know, the fact that we were ESG rated also helped, but we do see that yeah, as you said, things are changing and they're very fast, and we see banks adapting now very fast. Of course, every bank we talk to across the region, or actually worldwide, now their risk departments are trying to get their head around how do we measure and price merchant risk properly. And not every power plant or every solar or renewable asset can sign a PPA for various reasons. So market risk is definitely has become part of the equation, and it's important that it's properly understood and priced. And in the region, clearly the EBRD has been I think not only in terms of providing financing, but also giving guidance to other financial institutions, extremely helpful.
You have an energy trading side of the business as well. Have I got that right?
Yes, newly, yes.
How important has that been towards managing the risk around your energy generation assets?
Well, we only integrated this part of our business at the beginning of this year, so it's still early days. We have been selling through our own trading platform electricity from our own power plants in Hungary and in the Czech Republic. but where we see its value going forward is in being able to integrate, and we do have external customers as well. So in Hungary, we have other solar farms and wind park. But going forward, it's also about building up our supply business, and through that virtual power plant software, actually being able to connect both sides, supply and demand, and work effectively with flexibility. So clearly, as we want to invest into storage assets ourselves, but also in situations where we are an EPC, whether that's for utility scale or behind the meter, a storage asset becomes part of the installation. In order for batteries to work financially, you have to use their full potential. So not only load shifting or arbitrage, but you need to be able to provide and generate additional income and additional revenue stream for the battery through ancillary services. And that's easier said than done, because also what we see is in different markets, the regulations are different. So you need to understand them very well, and you have to be, be able to integrate it into an overall strategy. So going forward for us, this energy trading aspect of our business is of extreme importance.
Just last question for you, because we're going to be running out of time quickly, but your green bond, you're unusual because you're bridging between Western and Eastern markets. You issued in Western Europe. You mentioned it was positive. Can you give us any more color about the nature of success, oversubscription rates, or anything else you can tell us?
Well, at the time, first of all, an important part of this green bond issue was that, as with the previous bond, there was a significant part of, so we offered investors in the previous bond the option to convert. So that had, I would say, an unusually high success rate. So we got over 50%, which typically is 25 to 30%, at least in the German market segment where we are listed. So that clearly has been a significant success. And the previous bond was 45 million euros, and we managed to increase the size. I mean, it's not like we were 50% or 200% oversubscribed, but there was, in the end, we did have to cut back allocations mildly. Yes.
Material benefit anyway.
Yes, absolutely.
So we can expect to see more. Alexandru, from your perspective, what are the challenges for you now in taking this program forward, including capital raising?
I guess it's that the challenges are the same for everybody, because we are in a context that we cannot act independently. We have a positive aspect. We have the support of the shareholders. We have the support of the banks. We are seeing the appetite grow for the need to invest. So this is a very good sign. We still have difficulties. I think there will be some tough times ahead still for the next years, but things are, let's say, on an optimistic matter. Seems like everybody's aligned in this objective to sustainability and to green energy, which helps a lot the market because we can help each other. Although the issue you said is right, we are so many and we have more to do than we are. But we will figure a way out. You need the human resources, and they are limited because everybody's doing the same investments in the same time. And we can find solutions in reconverting, with educating. So I don't see a real issue on the short term there. So we're pretty much in line. It's good to have options. It's good to go to the market. For Electrica, the issuing of green bonds will be a first, but this is a positive aspect. We are looking to be first, even if it's a decision within the group. Our main objective is actually we're trying to set the stage and participate in the economical growth, but both with the objective of being sustainable. So this is something that we have in mind, and this is a message that we always promote.
A core message, and of course a message understood by investors, sustainable returns are now dependent on a sustainable planet. Very difficult to see how we can maintain sustainable returns to pay our pensions if we have extreme volatility from unsuccessful action, lack of action on climate change, and various other sustainability issues. How much of your portfolio at the moment is fossil fuel based versus non-fossil fuel based? Can you give us, the audience, an idea?
We are both listed. Let's put it like this.
Every electricity, most electricity companies.
Let's put it like this. The balance of fossil and non-fossil, it depends on the conditions of the market. The last 2 years are not something usual. So it depends. Romania has a specific energy development. We have from all the areas. So we have big hydro energy producers, we have nuclear producer, we also have coal producer or gas producers. So it's a mix. What we want to assure that by the time goes by, we will get more energy from the green production. And this is the goal that we have, to increase the energy that we distribute, and we distribute more than 17 terawatts per year, is to be focused on green and not on fossil. We'll see how we transition to this, because it's we have to consider all the factors involved. It's not just us. We are concentrating on the rest capacity, but there are other players in the market that influence this decision. We still need to provide the energy necessary to the whole system.
And that's, of course, the case for most utilities around the world. And this event today and this report is not about just green. It's about becoming green. It's about the process of becoming green, of course, with necessary ambition to meet our European targets as the background issue. But that's the transition, the change this is all about. I ask this question because I fully appreciate you have ambition to go green, to go greener over time. The challenge or the opportunity, I think, is to speed up that process. But there are many variables around that. First is capital allocation, differential capital pricing or access. And then, of course, there's regulatory issues. And then, of course, availability of supply, which Photon is trying so hard to deal with out of here. There are many complications in transition, but please don't make any mistake. This is about supporting the change to become green. It's not about saying, no, that's wrong. It's about what those plans are like, how to go forward. And the company transition certification that I mentioned earlier is exactly about supporting companies with ambitious plans over time to shift their portfolio from where they are now to a greener position going forward. Now, of course, there are criteria. So we'll talk privately more about that. But we're very supportive, and we're incredibly excited to see your green bond when it comes out, which is a use of proceeds model so far. But there may be other models coming forward. Look, just to wrap up this panel, can I actually ask Dubravka to chime in? I'm interested in whether you're seeing other appetite from your peers to do more bonds in this area, like SLBs, and what the response has been from the municipal owner, Zagreb, about this. Because, of course, one of the things we want to see is the growth of a municipal market and a municipal utility market in Eastern Europe. Give us a bit of hope here, Dubravka.
Actually, for our owners, this is a great win. It is a positive movement, because green questions and green transition is a part of their political program in that part. And I would say that all others financing that we are going to do is going to be linked with sort of the green. As gentleman said, it's going to be a slow transition. For our point of view, it will be a transition of using vehicles, standard vehicles, to some sort of the hybrid vehicles or full electric vehicles. In that sense, we also see some favorable market conditions in that part. And also, I see that the city is pushing in this way via their programs, especially photovoltaic on the roofs, and try to make this electricity more independent. In that part, however, their program is much more complex than our program, but at certain point, it is combined. So I would say it is a joint story of the city and the ZGH in that part. On the other hand, when you're saying what was the, I would say, response of our competitors and our peers group, I must say, I will be honest, I don't know. We are the largest. We were the first in that sense. Only I can tell what the banks and other investors said. They're quite positive. It was something new on the market for them, and that's why the oversubscription was 50% in that regard.
Fantastic. Please give our speakers a clap to finish up. Can I invite Massimiliano Riva from the European Bank of Reconstruction and Development to wrap up the day?
Thank you, and no worries. There is no speech between now and the lunch. It's really to thank everyone for coming here today. I think that in the welcoming remarks, say that every company should be ready now to receive a question. Why have you not issued a green financial product? And we do hope that in the next couple of years, maybe with our help of EBRD, of our partners, other development banks, you will actually be able, yes, I actually issued one or participated into one. The book that we launched today is our attempt to make it easy, make it happen. It's much actually, it's more difficult to write at 250 pages than a 25 page. So we hope is good enough for you to use it for your educational material, for your companies, for your peers, and for your colleagues that might wish and I might not have had the pleasure to still work in this market. I would like to thank the team with Climate Bonds. We worked over almost a year, Sabine, Rachel, and Gabriela here that has hosted us today. Also, great thank you to our office in Romania that has made possible to put real people on the stage and not have just a gray lounge somewhere in London. And particularly to Olga, Mihaela, and all the team and all the colleagues that help us in launching this publication. We hope to work with you. EBRD is an active investor, is an issuer, is a partner in many countries, particularly outside the European Union, where we have concessional facilities or technical assistance, where we can help companies in this journey. So do reach to us. We have colleagues in many countries now, even more that as we enter in sub-Saharan Africa and other regions in the world. We thank you also for the audience, the panelists today, the audience in the internet. We might have not answered all the questions that you had, but we'll try to promise to come back to you. So I think we are closing now the event for today. Thanks again to everyone for joining us, and there is light refreshment for the lucky people in Romania here in Bucharest. So thank you everyone, and we look forward to the discussion and follow-ups with you singularly and in the future as partners. Thank you.